Looking kindly on this space, at least for now. So one suspects, you bank this good news, but you prepare for the reality of maybe it not necessarily being always this way.
Yeah, that's exactly right, Carson. I suppose anything can change in terms of these natural disasters, but certainly we are seeing that the market reacting well today to this news. Of course, they have increased these insurance margins as a result of some less claims coming through for these natural disasters such as floods and bushfires, etc. They're now factoring in a much lower natural disasters expense claim of about $550 million in comparison to the previously expected $640 million. So certainly does look pretty positive, and as I mentioned, certainly seeing investors reacting well to that news today. But as you mentioned, in terms of some of the other points, we do need to keep a note of that in terms of the growth in their gross written premiums, which in fact is at the lower end of their guidance range, so coming in at around 3% as a result of some of those cost pressures and increases in their premium rates. And of course that $70 million that you mentioned in terms of that corporate expense, which is likely to be reported in their FY14 results. So just some sort of additional points to be wary of there, but certainly, as I mentioned, we are seeing investors reacting to this insurance margin today.
Let's look as well at Atlas, a good performance from it on the back of its numbers. Any kind of cause for concern?
Certainly are seeing it reacting well today, although interestingly, when we received the initial guidance from the company on around the 10th of July, we did in fact see the stock falling off about 5.3% on that day. So I suppose this morning we were a little bit cautious in terms of how investors were going to react to this today, but certainly it does look like that has been already factored in, and we are seeing a positive performance today. Of course, in terms of a lot of those record shipments that have come through, they are looking to reduce costs by about 5 to 9% in FY15. And they're expecting to now lift their production by about 12 to 15% in FY15. So all certainly looking fairly positive. One of our concerns was in terms of their pricing. That's come in a little lower than expected, and of course we are continuing to see a lot of this steep discounting, which potentially will have an impact on their earnings. We know that they are due to report coming into August, so that will be something we'll certainly be keeping a look out for. But I suppose long term we do remain quite cautious on this stock, given that it is highly leveraged to that discounting, and of course that iron ore price, and we've certainly seen it been coming under pressure. In terms of their Horizon 2 expansion, we also do remain a little bit cautious. We know that Horizon 1 is performing quite well, but Horizon 2 still requires a sort of a rail solution for expansion of some of its southeast Pilbara assets. So just something that we are a little bit cautious of. It is the highest all-in cost producer out of all of the iron ore miners. So in terms of that, we do still remain pretty cautious, and it is, a pretty risky stock.
Bigger picture, that Chinese data drop today, the way the market's handled it, what do you reflect on with that move?
It's been interesting, Carson. When we did see that drop coming through from that Chinese manufacturing read, of course we know it came through better than expected, coming in at 52 points. We did in fact see that materials sector turning around. It was in fact down about 0.5%, and it sort of turned around, trading relatively flat, but we are in fact seeing that the worst performer again. So really we did see a bit of an initial reaction, but it has fallen off yet again, and it does look like a lot of those gold stocks are dragging down that materials sector, in particular Newcrest mining. So that is in fact still the worst performer on the market at the moment, and that information technology sector does seem to be holding up some of those gains and performing quite strongly, up about 0.5%. But as I said, still trading relatively flat overall. I think investors pretty cautious, sort of sitting on the sidelines at the moment. We're still seeing very light volumes going through. I do think that's reflecting a bit of cautiousness and nervousness in terms of these record highs that we're seeing at the moment.
Watch for the PMIs tonight, Europe and the United States. Thanks, Leanne. Talk to you soon.
Carson.
All right.